While researching for this video, I came across Dr. John Ehlers' truncated approach to indicators. It's an intriguing concept that I think you'll find valuable. Hi traders. In today's video, we'll explore two indicators based on this approach and show you how they can work together to create a potentially profitable trading setup. Dr. Ehlers' theory is quite complex, so we won't dive too deep into it here. However, if you're interested in learning more, I've included links to both indicators in the video description. We'll also add a third indicator that complements our strategy nicely. Let's get started and see how these tools can enhance your trading. Our first indicator is called Truncated Bandpass Filter and Bandpass Filter by Immortal Freedom, developed by Dr. John Ehlers. For the sake of simplicity, we'll refer to it as TBPF from here on out. The indicator uses two main components, the bandpass filter, BPF, and the truncated bandpass filter, TBPF. The BPF acts as a signal smoother, filtering out noise to reveal the underlying trend. The TBPF, on the other hand, is a more responsive version that reacts quicker to price changes. You can adjust the source of the data, the bandpass period, and the bandwidth. There's also an option to choose between two truncation methods, giving you flexibility in how sensitive you want the indicator to be. Visually, the indicator displays the TBPF as an area chart, with blue representing positive values and red for negative. The TBPF line is plotted over this area using the same color scheme. The BPF is shown as a white line. By comparing these two, you can potentially identify trading opportunities when they align or diverge, but we actually gonna need only a TBPF for our today's strategy, so let's remove this white line. We'll get to the actual settings later in the video. For now, let's add our second indicator, and it's called STDC, Filtered Truncated Taylor Family Fur Filter by Lox. That's a mouthful. I know, so we'll reference to it simply as STDCF. This indicator combines several sophisticated techniques to smooth out price action and identify trends. It uses a type of digital filter known as a finite impulse response for a filter, specifically a truncated Taylor family version, which helps to reduce noise in the price data. One of the cool features of this indicator is its flexibility. You can choose from a wide variety of price inputs, including regular candle data, Heiken Ashi candles, and even a custom better Heiken Ashi option. This allows you to tailor the indicator to your preferred view of price action. The indicator also includes optional clutter filtering and standard deviation filtering. These features can help to further smooth the output and potentially reduce false signals. Visually, the indicator plots a line on your chart. It changes color based on the detected trend, green for uptrends and red for downtrends. It can also color the price bars and display trading signals if you choose. While it's more complex under the hood, the STDCF aims to provide clear, actionable signals for both trend direction and potential entry points. As with any indicator, it's most effective when used as part of a comprehensive trading strategy. Now let's dive into our strategy rules. But before we do, I want to explain how these indicators work together and show you the optimal settings. It's important to note that each of these indicators can give false signals when used alone. However, our final setup combines them effectively. Here's how it works. We'll use the TBPF as our main trend filter while taking buy and sell signals from the STDCF indicator. To get smoother price moves, we'll set the TBPF bandpass period to 100 and the STDCF to 50. This combination gives us a much cleaner looking setup. Now let's talk about the actual strategy rules. While they might seem straightforward at first glance, there's more to it than simply buying and selling on signals. First and foremost, we need to identify the trend direction using the TBPF indicator. It's pretty simple. Blue indicates an uptrend, while red shows a downtrend. However, when we take buy and sell signals from the STDCF indicator, we want to ensure that the slope of the TBPF aligns with the overall trend. Now, you'll often encounter situations where all our rules align perfectly, but due to our current STDCF settings, it won't print any more entry signals, yet you might still want to re-enter the trade. This is where our third indicator comes in handy. I featured this indicator in some of my previous videos, which I encourage you to check out. It's called Swing High-Low Support and Resistance by Pattern Smart. For our purposes, we'll keep only the lines on our chart, leaving the rest of the settings at their defaults. However, Feel free to adjust these based on your specific setup. For instance, if you're looking for more frequent entries, you can lower the number for swing strength. Here's how we'll use it. You'll re-enter on a price pullback and breakout of the area identified by this indicator. It defines the range based on the set period, which in our case is 5. Remember, you should only enter in the direction of the trend as identified by the color and slope of the TBPF. Another crucial point to keep in mind is the TBPF's distance from the zero line when you get a signal. The further it is from the zero line, the less potential there is for a continuation move. Therefore, signals closer to the zero line often have more room to run. Looking for the best oscillators to enhance your trading strategy? Don't miss part 1, where we break down the top 11 TradingView oscillator tools.